Hello and welcome to the week ahead video with me, David Madden. Now, before we take a look at the major events of next week, let's just take a quick recap of the major events of the week just gone. Looking here at the US30, we can see the market enjoyed an impressive rebound this week. In fact, early this week, it rallied to a level last seen in mid-January, which really kind of underlines how bullish the recent run has been. Although there's still speculation that the Federal Reserve might look to hike interest rates several times this year, it seems as if markets are getting used to that idea and they're no longer as fearful as they once were. But it is also worth noting the recent market peak is still well below the all-time high that was set in late December into early January. Now, we can see here we've seen a bit of a pullback in the last few hours. We had some very disappointing results from Amazon on Thursday night. That put pressure on the tech sector and, quite frankly, US stock markets across the board. So we have seen a bit of a pullback in the US30, but nonetheless, the market is still holding above these two simple moving averages, and while it continues to hold above these two metrics, it's likely the recent upward trend will continue. If we continue to move higher from here, we could have to target this zone here of 36,004, and a break beyond that could see it hit target this area of 36,512. If we do see a continuation of this near-term downward trend that we've seen, we could see the market retest this simple moving average here, which comes into play at 35,048, and a break below that could see a target this area here of 34,434. Now, it's worth noting that I'm recording today's video on Friday morning in advance of the US non-farm payrolls report, so any of the numbers I talk about in this video might be out of date depending on how the non-farm payrolls report numbers come in later on. Now, looking ahead to next week, we have the US CPI report coming out on Thursday. Keep in mind, CPI in the US is currently at 7%, its highest level since the early 1980s. The high levels of inflation is one of the reasons why the Federal Reserve have adopted more hawkish language. So, should we see inflation continue to be high, that could maintain the speculation that the Federal Reserve are going to bring in several interest rate hikes this year. And in turn, we could see that impact the likes of the US30. We could also see it impact the US dollar. And it's also worth noting, next Friday, what we have is the preliminary reading of UK GDP for the fourth quarter. Now, this is going to be in focus because it's going to give us an idea of how the UK economy fared in the final 3 months of 2021. Now, keep in mind, only yesterday, the Bank of England hiked interest rates by 0.25%. All 9 members of the Monetary Policy Committee voted for the 0.25% increase in rates. But it's worth noting that actually 4 of those MPC members, Monetary Policy Committee members, actually voted for a larger hike. 4 actually wanted a hike of 0.5%. So it shows you how hawkish and actually kind of and optimistic the Bank of England are. Now, we can see here that on the GBPUSD, it had a positive run for most of this week just gone. It was pushed even higher by the hike by the Bank of England. It continues to hold above these 3 simple moving averages, and while it continues to hold above those metrics, it's likely the recent uptrend will continue. Move higher from here, could see a target this area of 136.60, and a break beyond that could see a target this region here of 136.88. It's worth noting we have seen the market retrace a little from its recent peak. Looking at the MACD indicator, we can see momentum has swung from ever so slightly being in positive territory to now ever so slightly being in negative territory. So that suggests the bears are in control. If you do see further declines in the currency pair from here, support might be found from this simple moving average here, which comes into play at 1.3532. A break below that could see a target this region here of 1.3475. Now, going back to the US CPI numbers, that's likely to impact the US dollar and US dollar crosses, including GBPUSD. But we could also see it have an impact on is gold. Given that gold is traded in US dollars, if we do see a large movement in the US dollar, that can often have an impact on gold. And if you take a look at the price action this week, we can see, broadly speaking, gold has been in rebound mode. But we can see now that we can see a couple examples of the lows are getting higher, and we have seen an example or two of the highs getting higher as well. It is worth noting, though, that that the more medium-term trend has been to the downside. But if gold can continue to hold above these two simple moving averages here, it's likely the short-term upward trend will continue. If we do see a rally from here, we could be looking at targeting this area here at 1822, and a break beyond that could see a target this area here of 1833. Now, even though the more short-term trend for the metal has been to the upside, it's worth noting the more medium-term trend has been to the downside. And over a week ago, about a week and a half ago, gold did fall to its lowest level since mid-December. So if gold does manage to kind of turn lower from here, we could look to retest this area in at 1788, and a break below that could see a target this area here at 1780. That's all for me for this video. Thank you very much.